Friday, January 31st, last day of January. Market analysis. Stan Ehrlich, good morning. Almost 10 o'clock California time. I start out with stock market indexes and go to futures and sometimes other topics, cycles, seasonals, which is similar. Um, other topics. Now, we're at a very important juncture in the stock market indexes and pretty much have been there for this week. Today, we have modest new highs for the last few days for this week. Remember, Monday was a holiday. So you got Tuesday, Wednesday, Thursday, Friday. So I'm wrong. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, it was a full week. That was the previous week. Sorry. But finally, the gap is closed today, getting up to the low of the day before it gapped down. So there is no question as to whether the gap is closed. Plus, it's got some upside carry through. Now, we're right up against at the high of the day, the previous highest highs about a week ago. And more importantly, the trading range that the market was in from December 4th to December 17th before it tanked. So we're right back up to where we were. We're not overbought. Frankly, I have two suggestions, and they're both going to be fairly radical. If this starts to slide and does a reversal, that could be the beginning of a move all the way down to 58.40, let's say, and even lower, this support area. But let's see that start first. It's not at the moment, not that I can tell. On the other hand, if we stay here and climb some more, it'll explode through these previous important historical highs for more likely than not another significant leg up and get overbought again and have a correction again, but not anywhere near as bearish as what I think might be very close to happening, but it hasn't started. So I can't tell at the moment, frankly, and I'm sorry about that. Let's go to the 1 minute chart. Okay, we popped up, made a new high for the session, settled back to a little bit of support for the session only a few hours earlier, came up and didn't make a new high, and settled back very slightly. We're still up a decent, almost 4 points on the day, 38.50 for the mini. Now, the spider would be very similar, not exactly the same. We're closer to the high that was made just a week or so ago. And that, at the time, was a new historic high, but not by much. And then it fell apart. So it is still a resistance level. And now here we are the third time. Plus, we gapped up slightly this morning. Now, gaps are almost always filled. That's exactly what happened here. We gapped up a day or two later, kaboom. So there's that chance that it goes kaboom again. On the other hand, it could just explode upwards, maybe even 10 points today or something, but a very sharp rally or a sharp break. I don't think it's going to go sideways here. That's not likely in my opinion. And the 1 minute chart, high, backed up a little, couldn't make it through on the upside, backed up a little. Can't really tell. It's just very close here. All right, what about the Qs? Well, it finally closed its gap also from the beginning of this week, from Friday of last week to Monday of this week. That's done, but it gapped up this morning. Gaps are almost always closed, so I think we're going to go back down to the high of yesterday, probably very soon. But that's not really that much. We're not overbought, and we weren't even overbought a week ago. Only at the highest high historically so far, and that was on December 16th, which did top it out, and we had a pretty decent correction. But is this just a big trading range for a month or so, month and a half? Possibilities. I'm just looking for a significant reversal. It should be red, bearish. That's what I'm expecting because we're pretty high on the RSI scale. And the highest high still was overbought, and we couldn't make it on this one. And so far today, we're not making it on this rally and a gap up. So very, very important to watch closely which way this thing is about to move, and it's probably going to be very significant. So you had a rally high this morning on the QQQ. It dipped back down very slightly, couldn't make a higher high. They're all about the same on the 1 minute chart and settled back a little bit. What about the NASDAQ, the Dow? I'm sorry, the NASDAQ, the QQQ, little brother, so to speak. It's very similar to the QQQ. So we have the top of the market, middle of December, overbought, pulled back, came back to a support area, previous important low, very close to it. Went up and tried to make a new high, had a bearish engulfing, had a very sharp down Monday like all of them did. And now we've come back to close the gap completely. If this thing all of a sudden tips over and starts to fall quite a bit, again, it could be the beginning of something fairly bearish for a month, two at the most. But I do not believe this is anything that could happen as far as the top of a long-term bear market beginning. No, I don't see that. So it's a matter of, is it going to plow through, or are we about to flip? Next. And the 5-minute or 1-minute chart shows the same detail. Next. What about the YM? Now, it's been overbought, and this does happen for several days. 1, 2, 3, 4, 5, 6, 7, 8, 9. And today is a new high for the rally, a little tiny bit. Basically, the high Tuesday, Wednesday, Thursday, and today, Friday, are very close to each other. And at the moment, the market is actually a little tiny bit lower on the day. Call it unchanged. So if it falls apart, you will get a bearish engulfing ER sell signal after being quite overbought for a while. And we're going to call that a potential double top. But it remains to be seen. It's got to start slipping. And the 1-minute chart, obviously more bearish, came down, made a new low for the session, which started over here, and that was yesterday afternoon. Overnight, what was it, 1:30 a.m. California time, it made a high, tried to make another one, came all the way down, rallied up a little bit, and now it's coming back a little bit. So, I don't know. We're touchy situation. Let's look at the Russell. We hit a resistance area again at today's high, and we're still there. So it could be at a very important spot in order to pull back down again as well. So I've got reasons to believe pretty much across the board that we might see everything start to slip. But at the moment, I can't be sure. On the other hand, we're close to a breakout to the upside. I don't know. Now, you know, the trend is your friend, and the trend has basically been up for quite a while for the Russell. But the historical resistance areas that we're dealing with are really, really very strong. It could have another correction and not do any damage to the long-term uptrend. Next, the 1-minute chart for the Russell, obviously in the last few hours, much stronger near the rally high. Still right up there. Pull that to the left. Good. Yep. Now, bonds. A little bit lower on the day. Pretty much a doji. I think today's low is a couple of ticks lower than yesterday's low. We are still long bonds from the exact low day. There was a bullish engulfing ER buy signal on January 14th of this year, only a couple of weeks ago, and it was the bottom day. I showed you this. I told you this. If it happened before the YouTube recording on that date or after my YouTube that date, I talked about it at great lengths, I'm sure, the next day. This is looking good. It's a relatively small to medium 1 month head and shoulder bottom. We got a breakout to the upside on January 27. We got a test to support the neckline the next 2 days. You have a new high for the move up yesterday, and today it's just resting a little bit down a few ticks. No major problems. I'm looking for higher levels. Minimum upside objective is 117.5. But this is a possible broad double bottom over a 1.5-year time frame, and that is a much bigger, longer-term bullish scenario. We do need to go quite a bit of a distance here in order to have any long-term convictions. Right now, for the next month or two, I do think it's going to come up to, say, 20, maybe 119. Next, 10-year notes are really having a trouble here, breaking and staying above the neckline. Now, one little quickie here. Let's go with, I'm sorry, I've got to highlight that, and I think I'm going to go, good. Now you can see, I'm sorry, the little sky blue markers. So we are currently trading just a few tiny ticks lower at the moment than yesterday's close, which was a very, very minor new high close and a minor 1 or 2 tick new high. So nothing's profound. Today's low is about the same as yesterday, a tick or two lower. And I'm just hoping this thing pops up, 10, 20 ticks plus a lot more very quickly in order to get the ball rolling. It's just starting out very, very slowly. Yesterday was probably the official upside breakout, but that's not typical. Normally, when you have these breakouts, you have a big high volume day and a large rally. That didn't happen. And today is another nothing. But I can't change my opinion. The pattern's still there. Things are still doing very slowly what they're supposed to be doing. Okay, what about crude? Low and last almost, minor new low for the move, breaking a trend line, the old bull trend line to the big, big, big pennant formation, and it is sinking back into the pennant. So I'm looking for probably 66 on the downside. Long-term trend kind of in question at this point. Couldn't make it above important tops back in March. It did make it above some highs back in June and some high bear signal on October 10th, I think it was, October 8th. So that's all well and good on the upside, but it didn't have follow through, and all of a sudden, kaboom. In fact, I think I looked at this closely. Yes, indeed, every single high since the high day, that high is lower, 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 lower. Every one of them is lower than the previous day's high. Just get pressure to the downside continuously since that turning point. I'm looking for a little bit lower. Next, we're looking for heating oil to do just about the exact same thing. Back to support. Back to about 2.3. And what do we got for natural gas? We do have the head and shoulder top formation doing very nicely. Now that we're in the fourth day after the downside breakout, a lot of this is extremely stereotypic, classic, normal, textbook. You got your rally high and a big up gap and it quit when it got overbought for the first shoulder. You don't know it's a shoulder at the time it happens. You come down to a low, it holds, it turns around, makes a new high for the move, it gets overbought again. So you got a little bit of a double top maybe, but a correction would definitely be expected because of the overbought. It comes down, has a correction, and then bounces back up again. And we're now looking at January 23-ish, 24. And all of a sudden on January 27, we have Monday of this week, a test of a neckline that I drew, but it didn't break out on a closing basis. It fixed the problem the next day, Tuesday of this week. The high of the day is on the neckline. Every part of that day is at or below the neckline. Big down day, new low for weeks, classic downside breakout. Bounce the next, new low the next. Today, new low, looks like another new low close. We should be on our way down, as I've been saying, to 2.4. Next, gold. Overbought now for the second day in a row, small range, around unchanged. Once it gets overbought like this, I do start talking about the market turning down, but I don't see at the moment anything at the moment that says it's today. It started today. I do have an upside objective because of the pennant formation that is twofold. One of them's 2987-ish, and the other one's 311617-ish. And that's because of the size of the back of the pennant formation, as well as the beginning of the staff of the pennant, the post. So those are the two ways you can measure the upside when they break out bullishly, and this one did. But they're supposed to have typical downside correction in the process. I'm trying to pick the turning point for that, and I think we're close to it. No big move down, won't last very long, and it should hold well above this line and then make new highs. Next, silver. Up in resistance like yesterday, but a new high today had no follow through, and now we're down a chunk near the lows. The resistance area probably did stop the rally, and we came pretty close to overbought. So I am looking for a little bit more downside correction, and that goes with the gold. It got overbought, so they match 30.23 or something, and maybe a little higher than that. I'm not really bearish. I'm just looking for a little twitch to the downside here. My longer-term trend has to be pretty much neutral still. Platinum, overbought, 2 days sharply up. Resistance area just like silver was. I think it's about to turn down very soon. Could be now, but I can't tell. overbought quite a bit, 83.55, the highest overbought level since May when it did top out, although RSI was a lot higher than that. It's up 93. Nevertheless, when we got overbought, we topped out there. Bearish engulfing ER sell signal also. When we got overbought here, it pulled back for about a week, not very much. So I'm expecting it to pull back. Next, copper. Pretty much going sideways here for about a week or so. Today's a doji inside day with a slightly lower tick at the moment than yesterday's close. I'm looking for a little bit more of a dip down, but you know, the bigger picture is this major support area, lows in August and around similar in September. Then it did it again November and early December. Then it did it again just at the beginning of January. And it included some new lows that didn't have any downside follow through. It came rushing right back. And then we got a sell signal, perfect at resistance, perfect, overbought, perfect. So now what? I don't know, a little bit sideways. I'm kind of expecting in general higher highs, but I could see it dipping down a little bit more first. What about soybeans, bean oil, meal, corn, wheat? I have to say something similar. I am trying to maintain a long-term bullish expectation for grains in general. That means that we can't do any damage to the longer-term trends. We have to bounce off significant support areas. We have to start making minor and then more significant than that new highs for the rallies. And right now we have a minor new low with a higher possible close. It could have seen a low today. A little, there's not much to go on. But the bigger picture again is a wider, broad bottom formation. If we start to close above 1081, pop, it should go up a lot. My upside objective would then be 1186. Soybean oil. Kind of a little bit weird here. Apparently jumped up a heck of a lot and then pulled back to slightly higher. Now, I am expecting the support, which has already held twice, to continue to hold, but I don't like that strength, and it gave it all away at the moment. But it didn't give all of it away. Still hanging in there at the same damn prices we've seen for a few days. So I'm wondering if, and this is bad data, but I have no way of checking it at the moment. So I like what I see bullishly. I'm looking for a longer-term bullish picture. I need a little bit more strength. New high closes. Next, soybean meal. Came down to support right where it held before, turned around very handily, and is slightly higher on the day. We are not oversold. We're neutral area, 51 on RSI, so that's not giving us any help. But the bottom formation is a broad triple bottom, maybe. And it goes back to June of 23, so we're looking at about a year and a half in size. So I need closing prices above 322-ish, and as soon as possible, in order to maintain that triple bottom idea. And that would be very bullish intermediate to a little bit longer intermediate, and maybe even long term. When I say long term, I mean several months and more, like say 3 or 4 months plus. Intermediate would be 2 to 4. Short term would be weeks to maybe 1 month. So I'm looking for strength. And corn did fulfill my minimum upside objective because of the head and shoulder bottom, first shoulder low we've got on July 12th, buy signal. We got the bottom of the market on August 27th, and we got a buy signal again at the low, 1017, which was the beginning of the move up to the neckline, which was tested, backed off a little, broke falsely, backed up a little, and finally the legitimate breakout, boom, strong up day the next day, and then follow through, and finally a little reversal didn't work. So it's done. It got up to its minimum upside objective also very accurately on the 23rd of January. Today's the 31st, remember. So what do we got? A new high close and a new high on Wednesday. But Thursday, it pulled right back down to where it was. And today went all the way down to the low of the last week and a half and is still not recovering that much. We may have topped out, and we may have another move back down to 460. Little ambiguous about that, but the longer term trend is looking very nice. I am bullish longer term. The next thing to overcome here is 515 on a continuation contract. And if we do that, then we're probably setting a major long-term bottom in place and would more likely than not move up to something like 630. Next, maybe double bottom in wheat. Not particularly good day today, but not doing any real damage. As long as it holds, I don't know, around 540, 532, or anything higher, and starts to close above 570, I would be very happy. Next, we got cattle. Well, okay, got very overbought. In fact, 87, 88, super. If it gets to 90 or higher, I start screaming bloody murder, topping out today or the next day. So we didn't quite get there, but it topped out. Coming down on Wednesday, Thursday, today, a little tiny bit lower low, but a bounce at the moment. I'm still looking for a little bit more on the downside, but not too much. This is not turning into anything more I expect than a downside technical correction. I don't see any major long-term top here. I wish. I do like my filet mignon occasionally. Next. Hogs got overbought on the high day, pulled back this morning, but currently trading around unchanged. I think we could see a little bit more dip, but I'm basically neutral here to a little bit friendly. The trend is up. It did hold its support. I don't know. Nah, no conviction here. And from our last one, XYZ used to be SQ. Martin Luther King Day, I believe they switched the symbols, has made a new high for the move up yesterday, but we gapped up a little tiny bit. So I'm not going to be surprised if we come back to Wednesday's high, which is not too much lower, minor dip, just a little bit below yesterday's low, and turn up. It may not, it's such a small gap, I'm not sure that it would even be closed. But if it is, fine. It might be a very good place to consider going long on the gap closure or a couple of ticks above it. I like what I see. I'm looking for higher levels, and it could be a hell of a lot higher. Please keep in mind, this is a 2-year huge trading range bottom that it broke out of back in November and has done nothing more than made a high, came back to support, and is now on its way, I think, to making another new high. Back to the mini. What did we do? Oh, we got a dip here. Okay. This gains my interest a little bit. Yep. You guys have a great day and profitable trading to you.